You're watching Squawk on the Street on Cnbc. First in business worldwide. We're tricks of the trade from the world of finance. CNBC 101 on Power Lunch today, noon Eastern on CNBC. Sponsored in part by TD Ameritrade.
All right, we have a mixed market today. 3 days of gains, and now it's mixed. The Dow's up 6, NASDAQ and S&P are lower. Most actively traded here at the New York Stock Exchange. Hewlett-Packard, stellar earnings, the reason for that jump. Meanwhile, over at the NASDAQ, which is down nearly 2 points, Intel, the most actively traded individual stock, and otherwise all to the downside on the NASDAQ. David Faber's got some deal news for us.
Well, you know what?
Retail index doing pretty well. That's all the time we have. Thank you very much for watching. I'm Mark Haynes.
And I'm Erin Burnett. We'll see you back here tomorrow morning, and I'll see you this afternoon on Street Signs at 2 p.m. Eastern. It's time now, though, for Morning Call.
And welcome to Morning Call. I'm Mark Haynes at the New York Stock Exchange.
And I'm Liz Klayman at CNBC Global Headquarters. The Congressional Budget Office is just now releasing a summer update of its budget and economic outlook. Senior economics reporter Steve Leisman is on the case. Steve, what does it say?
It says that the Congressional Budget Office is saying the U.S. government deficit will increase nearly $400 billion more over the next 5 years than it originally projected in March. A new forecast for the deficit saying Uncle Sam will bring up $1.4 trillion in deficits from 07 through 2011, compared with $1 trillion in the previous forecast. At the same time, because of economic growth, the deficit as a percent of gross domestic product or overall growth will stay around 2%. In this new report, they are confirming their projection last week of a sharp $35 billion improvement in the 06 fiscal outlook, but that worsens in 07. Let's dig in to what's behind the upbeat short-term outlook, but this worsening long-term situation for Uncle Sam. Joining me from Washington, Donald Marin, acting director of the CBO. Good morning, Mr. Marin.
Hi, Steve. How you doing?
Just fine. Let's talk about this. Well, first of all, 06 looks like it's gotten a lot better, but 07 gets worse. What's behind the change?
Well, for this year, tax revenues have been much stronger than folks expected. That's been
Rising this morning. New multi-year highs. Last night, the computer and printer maker posted better than expected earnings. Raised their full-year guidance. And, for good measure, announced a $6 billion share buyback. CNBC Silicon Valley Bureau Chief Jim Goldman in Palo Alto with a look at HP's hot run and whether there's still time to get in on the stock. James, good morning.
Good morning, Mark. It's been a rockin' 24 hours for HP shareholders. HP hitting a new 52-week high before those earnings even came out.
News from Hewlett-Packard helping to lift the blue chips. Right now, the Dow's up 21 points. Actually, 21 and a half if you want to get picky. The NASDAQ is up 38 and a half. Yeah, that's a lift in tech land that we haven't seen in a whoa. I beg your pardon. I looked at the wrong one. Looked at the wrong one up here on my board. The OSX is right below it, and I looked at the OSX by mistake. 5 and change for the NASDAQ. And the S&P 500 is up just a tad. Light sweet crude? Cooperating, huh? Look at that, 70.60. Wouldn't you like to see a 6 handle on that puppy once more? Bob Pisani's walking around on the floor of the NYSE, checking out today's action. Roberto.
A little bit of crowd in Bristol right here behind us, not moving too much, but I want to talk about the retailers because we're just about done. We've got a few more to go for the earnings season, but the expected dramatic slowdown and the terrible earnings guidance, it really did not materialize in any big way. Let me just give you what we're looking at in terms of the subsectors in the retail group for the second quarter. Home improvement stores, and basically, folks, you're looking here at Lowe's and Home Depot. Earnings up 11%. That was a lot better than some people thought. Remember, these companies got hit very badly in this quarter on perceptions that the real estate market was going to slow down, and it did, but their earnings were not disastrous. Department stores were the big winners. They were up 28% for the quarter. That clearly was the big mover to the upside. Apparel was down 20%. There's your loser. Companies like Gap had some problems. We're still waiting for their earnings comment, but Gap's didn't do too well. TJ Maxx didn't do well. Limited fare, not great overall. The discounters, and here again, Walmart and Target, up 5%. Problems with, of course, the customers at the lower end with gasoline, but even 5% not a disaster, although the stocks have not done much so far this year. Let's talk about Barnes & Noble. Mark, you want to see what a change in sentiment does for people. Barnes & Noble just had a terrible time for the last few months, and it's a simple idea. In a situation where consumers are slowing down, are people going to spend a lot more money on books? I don't think so. The stock was down 25%. That's a 3-month chart that you're looking at. Look at the last couple of days. It's been moving up. Why? Perceptions, maybe things aren't as bad as you thought with the consumers, and they came out with their earnings today. Here's an interesting point. Sales were down 1%. They're having a tough time with sales, but earnings were up because of lower costs for rent and goods. In a really bearish environment, the stock would have sold off, but the perceptions are a little different. Now it moves to the upside. Some quick story stocks here. Let's just mention Boeing very quickly. They failed to secure some new orders they needed for that C-17 cargo plane. Now they're saying they're going to be winding down that program unless they get some firm orders from the Pentagon very quickly. This is one of their biggest programs. By the way, they also announced they're discontinuing their high-speed broadband service, Connexion. General Motors down 2% on the pre-open on a JP Morgan downgrade. The stock, though, this is the big winner in the Dow. It's up 60% this year, and the big questions have been answered to a certain extent. JP Morgan said, and they're right, the Delphi strike and the sales of GMAC largely answered. Finally, Sears had good earnings, but the stock is down today. Why is it down today? Well, from what I can tell from the traders, there's hints that the company might make some more acquisitions, and that generally weighs on stocks often. Liz, back to you.
Yes, Bob, and we are also looking at Treasury prices, which are rising this morning. Just to let you know, we got the leading economic indicator number down 0.1%. And right now we do have money going into the 2, the 5, the 10, and the 30, with the yields moving down. The 2-year yield at 4.87%, 10-year yield at 4.85%. Those numbers are tiny. Dollar. Looking at the greenback today, it's a mixed picture. While lower against the yen, about 1/3 of a yen lower, we have it lower against the euro at $1.2864 buying you a euro, but higher against the pound sterling, $1.8932 will buy you that pound. Precious metals and a few base metals as well going down. We've got gold and silver lower. Gold's down about $3.30. Platinum pulling back by $6.50, Mark.
Yeah, Liz, those are interesting numbers, but they are